Hey, I'm Max Feutz, Keller Williams Realtor, serving Southeastern Wisconsin. I am your Wisconsin Realtor. And of course, this is Aaron with A+ Mortgage, my preferred lender. I'm so excited to sit down with him. Today, we're going to be talking about one of the most important factors when it comes to home shopping because of our low inventory. Most people are afraid to put their home on the market, sell it within 2 days, and then be homeless. That's obviously a real concern. So one of the tools that we are implementing that Aaron is educating myself about, as well as any consumer that's entering the market, is something called a bridge loan, which is allowing my clients and home buyers out there to find their home first before they sell their home, allowing them to make that transition into their new home without having to find other living accommodations, family, friends, hotel. If anyone's ever done that, trust me, they have a horror tale to tell you about the logistics behind that move. So Aaron, thank you very much for meeting with me today. I am very excited about this one because of how many people this is currently affecting in our market. And what I think I want to do is just what is a bridge loan?
A bridge loan, in simple terms, it's really tapping into the equity of the home you currently own. And some people might think, well, I haven't lived there that long. I just bought it in 2019 or 20. The market has appreciated so much, which you're aware of course, over the last 3 to 4 years, that now you're sitting on this big chunk of equity in your home. You're tapping into that equity, and you're now able to use that money for your down payment and closing cost, or possibly even having some left for furnishings and whatnot for your new home, without having to have your home sale contingency of your current home being sold beforehand. Now, there are qualifiers, of course, with that, but so many people we're finding actually do qualify for it, and they weren't even considering it. So if I have a home and I'm hesitant to want to list with you because I don't want to fall into the scenario that you just mentioned in terms of calling friends and hotels and all that good stuff. Instead, now I'm submitting an offer. There's no home sale contingency on there. We already have the client set up with a bridge loan, so now they're tapping in and getting, we've seen anywhere from 50 grand to 200,000+, depending on what the client wants to do and what makes sense.
Yeah.
And now that chunk of money above what they owed on the home is now being used for that down payment closing cost of what we suggested earlier. Now they get the accepted offer in the new home. They might decide to wait a little bit, or they might now list with you right afterwards the home that has the bridge loan now on it.
Mm-hmm.
And now when they sell, that mortgage is gone, bridge loan is gone. So it's all wiped away for a very, very low cost in the bigger picture of things. And a lot of times it's going to be, maybe a few days. My last one was, I think, 5-6 days of daily interest. And it was seamless. It allowed them to be the winning offer and not have to feel like they're homeless in between or running any risk. So I hope that makes sense.
Yeah, and I just want to reiterate this for common language. So I'm thinking about moving into my forever home from my starter home. I have equity built up in my home. When it comes to the actual money, so I'm writing an offer on the next. I'm closing on the home that I'm buying before I sell this home. I don't have really the cash on hand for the down payment for the next home. That money is coming from the bridge loan. So I qualify the bridge loan with you, and then is it like a wire transfer into my bank account, or does that go straight to the title and closing, or how does that work?
It's going to depend on the timeline of when you're closing on the bridge loan and the lender. A lot of times, if it's done with A+ Mortgage, we're going to time out the closing of the bridge loan with the closing of your new home.
Okay, yeah.
That way you're not, number one, having to come in 2 different days and spend that time, and we can typically bundle it with title to save you some money from a title standpoint for the closing of both of them, and then the money's already waiting there, wired previously from A+ Mortgage, already in title's hands. Very, very simple. So yeah, it's actually a really streamlined process. And the documents needed are the same documentation that's needed for
the other loan.
The other loan anyway, so it's really not adding any additional hassle outside of just exploring the opportunity.
How does that look when, so I am purchasing the next home, I'm putting the down payment on that home. Obviously, I'm going to carry the 2 loans for a little bit. So Max comes to my house, he explains hey, we do have financial options for you to be able to do this, win the offer, not be homeless. However, I just want to make sure that my money is correct. So Max told me how much the home is worth. I know how much I owe on the home. So the difference right there is that equity. What is the percentage? How do you determine like how much money you can lend me for the down payment of the next home? Is it a percentage of the equity? Is it a percentage of the home value? Is it an equation that includes both of those items?
Outstanding question. We're going to look at fair market value without necessarily having to do an appraisal on it. So, it might include running some comps, possibly talking to you on it, looking at what that number is going to be.
Mm-hmm.
And we're going to go to 80% of that value of the home. The reason for the 80% is...
the fair market value.
The fair market value,
Okay.
yes. The reason for the 80% is when that client sells, there's going to be some commissions, some title fees, possibly some other costs that are involved. And we want to make sure that we're adding a little bit of a gap in there as well, just for security purposes on the loan, where that you're not stuck with a bill at the end of it if the market were to shift, which obviously has not happened in quite some time.
Mm-hmm.
At that point, whatever that value is at 80%, so let's say it was a home that's valued at fair market value is $500,000, 80% is now $400,000. Let's say you owe $250,000 on it. We can go up to $400,000. You owe $250,000, so we have up to $150,000 that we could potentially play with if we want to. Is where that gap will come from. Now, you're correct that there would potentially be two mortgages for a short time. However, on the new home, let's say you are closing and you got an accepted offer today,
Mm-hmm.
and you're going to be closing the first week of June, 1 month from today.
Yeah, gotcha.
Your first payment on that is not actually due until the first full month has passed. So in this case, closing the first month of June, your first payment is not actually due until August 1st. What's likely to happen is you're probably talking to your client between now and that closing in June, and whenever they feel strongly enough about it, they're now listing the current home, even though a bridge loan's in the works on it. And now suddenly that home is under contract before you've even closed that first week of June. And now suddenly that sale, you're buying your new home, selling the old home, let's say 2, maybe 4 weeks later, and those two payments never even crossed over yet. See, the buyer never even felt the effects of having the two mortgages. So
that's very nice.
Really a streamlined process.
Is there what's the costing associated with, like, is there loan origination costs for the bridge loan?
Loan origination, no, if you're doing your normal loan with us, because we're already doing that. We're already getting all the same documents. We're already running everything through underwriting. There is an additional $350 processing fee. There is going to be an additional title fee to close on the deed and register the deed and the mortgage, because it is still a new mortgage now on the bridge loan. But it's going to be very small. In the bigger picture, it's going to be about $500 or $600.
$600 not to be homeless.
Not to be homeless.
If you consider how much you'd have to rent a short-term rental, which, oh my gosh, they're so expensive, especially if it's more than 2 bedrooms sort of thing, or staying with family, depending on family, might be worth $600. Yeah, especially because for a lot of people, you're moving into your forever home, so you don't know when you'll find your forever home or if you'll win on the first try, whether or not, sometimes it's beyond education, it's just your financial capabilities. So the problem lies if you sell first and now it takes us a year to find your forever home because you needed the money for the down payment of that one first, that gets very ugly.
Absolutely.
So that is fantastic because you don't, correct me if I'm wrong, but you're not paying anything on the bridge loan as far as interest or monthly just because you have it in place ready to shop for your next home.
No, you're not. You're not paying. Daily interest will kick in, and I say daily. It works very similar. It's an interest-only mortgage, being that it's very short-term.
Mm-hmm.
But it's generally, most of the ones I do, it's daily. I mentioned the last one was 5 or 6 days. The one coming up is going to be just probably a little bit longer than that, where at the end of the day, that's going to get paid out. That's going to get deducted, let me rephrase. When that home now sells and the bridge loan's paid off, that 5-6 days of daily interest gets tacked on top. You never actually paid anything out of pocket at all. It's just being deducted when you sold the home. But now you got the home, and you're not losing out having this home sale contingency or afraid to submit an offer thinking, well, how am I going to proceed?
Yeah, absolutely. Absolutely. And the beautiful part is the entire time you're shopping, not paying anything for having that loan in place. Then once you close on the next, then you have that period of daily interest. But typically what you're finding is you're moving into your next home kind of as quickly as you can close kind of thing when you're moving out of your last one. So the cost is minimal to get you into your next home, because the big part is also winning the home. If you're trying to purchase a home with a home sale contingency in today's market, which depending on the area either goes from a severe seller's market to basically anywhere still a seller's market, if you have one other offer on there with the exact same terms, but you have the home sale contingency, it's a super easy decision for the seller not to choose you because of that variable where they don't know the outcome. You know,
Absolutely.
There's so much that could go wrong with a home sale contingency, especially when you have an alternative with favorable or similar to favorable terms.
Absolutely.
So it is an amazing alternative to help people win offers, to make sure they're not homeless, and to have a seamless transition into their next home for, quite honestly, like a minimal fee. Like in the grand scheme of purchasing a dream home, especially when you're considering alternative accommodations, very minimal transition cost. So again, thank you very much. I appreciate your time. And this is a tool that I sincerely kind of encourage a lot of my buyers who are moving into their second home, moving into their third home, to help us win offers and to help us make that move as easy as possible. So thanks again, Aaron. I really appreciate it. This is Aaron. If for any of your mortgage needs, or if you just reach out to me, trust me when I tell you, he is an extension of my team. We work very closely together on all of our deals when we have clients in common. Very seamless, very happy. So thank you for your expertise and your knowledge, and I appreciate everything.
You're welcome, and thank you, Max.
Awesome. Have a good one, guys.